$100,000 plus before experiencing a sharp crash to its current level of around $91,921. But what caused this downturn? More importantly, does this recent dip set the stage for an explosive rebound in 2025, potentially taking Bitcoin to $250,000 or more? Let's break down what's been happening, the driving forces behind Bitcoin's crash. Why 2025 might be the year it skyrockets. What happened in January 2025? At the start of January, Bitcoin seemed unstoppable. 1. Strong adoption by institutional investors and renewed optimism about cryptocurrencies pushed the price over $100,000. However, the global financial environment began shifting. Central banks, particularly the US Federal Reserve and the European Central Bank, signaled a pause in rate cuts. This reduced liquidity in markets, causing risk assets like Bitcoin to lose momentum. Liquidations and panic selling. Bitcoin is a highly leveraged asset. When prices dropped below key support levels, it triggered mass liquidations of leveraged long positions. 2. Around $200 million in liquidations were reported on major crypto exchanges, creating a cascade of selling pressure that deepened the crash. Regulatory developments. News of tighter regulations from the European Union and the US regarding crypto taxation and exchange compliance also spooked investors. These regulations aim to bring more oversight but often create short-term panic in the market. Psychological factors. The €100,000 mark was a psychological milestone, and many traders took profits, further amplifying the sell-off. Fear, uncertainty, and doubt, commonly referred to as FUD, quickly spread, leading to further panic-driven selling. What's driving optimism for 2025? While the crash might seem alarming, there are compelling reasons to remain bullish on Bitcoin's long-term future. Let's explore the potential catalysts that could push Bitcoin toward the $250,000 mark by the end of 2025. Halving event in 2024. Bitcoin's next halving event is expected in 2024. Historically, Bitcoin's price has surged in the 12 to 18 months following a halving due to reduced supply. With fewer Bitcoins being mined, supply-demand dynamics favor a price increase, especially as institutional adoption grows. Institutional adoption. Large financial institutions like BlackRock and Fidelity have already filed for Bitcoin ETFs. Approval of these ETFs in major markets like the US could bring billions of dollars in new investment into the crypto space. If institutions allocate even a small percentage of their portfolios to Bitcoin, it could drive prices to new highs. Emerging markets and adoption countries in Latin America, Africa, and Southeast Asia are increasingly adopting Bitcoin as a store of value and a medium of exchange. As inflation continues to impact fiat currencies globally, Bitcoin's fixed supply becomes an attractive alternative for investors and governments alike. On-chain data trends. Long-term holders, or hodlers, remain unfazed by the recent crash. In fact, data shows that the percentage of Bitcoin being held in wallets for over a year is at an all-time high. This indicates strong confidence in Bitcoin's future value. Geopolitical and economic shifts. Uncertainty in traditional financial markets, potential conflicts, and declining trust in fiat currencies could all drive demand for Bitcoin. With more decentralized finance, DeFi, projects and blockchain-based applications gaining traction, Bitcoin could solidify its position as the foundation of the crypto ecosystem. Why $250,000 is possible? Limited supply meets growing demand. Bitcoin has a hard cap of 21 million coins. As institutional and retail demand increases, the limited supply creates upward pressure on prices. If even 10% of global hedge funds and sovereign wealth funds invest in Bitcoin, we could see exponential price growth. Network effect. Bitcoin's adoption follows the principles of the network effect. The more people who use it, the more valuable it becomes. With global adoption accelerating, Bitcoin's price could scale dramatically as the user base grows. Comparisons to gold. Many investors now refer to Bitcoin as digital gold. If Bitcoin reaches just 10 to 20% of gold's $12 trillion market cap, we're looking at a price of $250,000 or more per Bitcoin. Key risks to consider. While the future looks promising, investors must also be aware of the risks. Regulatory crackdowns. Governments could impose stricter regulations that stifle innovation and adoption. Competition. Emerging blockchain technologies and other cryptocurrencies could divert attention and investment away from Bitcoin. Market volatility. Bitcoin's price will likely remain highly volatile, with sharp corrections even during a bull run. The recent crash from $100,000 plus may feel like a setback, but it's worth remembering that Bitcoin has weathered similar downturns in the past. What separates Bitcoin from other assets is its resilience and its ability to come back stronger after every correction. As we move closer to the 2024 halving and see increasing institutional interest, Bitcoin could be poised for explosive growth, potentially reaching $250,000 by 2025. Whether you're a believer in its revolutionary potential or a cautious observer, one thing is clear: Bitcoin's story is far from over.